Hey guys, my name's Caleb, and in this video, we're going to be talking about Cathie Wood, Kevin O'Leary, and the recent interview they had where they talk about Bitcoin and their predictions of where it's headed, Bitcoin and taxes, and a little bit on Energy Web Token, or at least in my mind, where they're kind of headed towards the using and use cases for Energy Web Token. So let's go ahead and listen here. This is Cathie Wood being asked about Bitcoin and institutions, and let's listen.
Actually, we gained, or our clients gained, their first exposure to Bitcoin in 2015 when it was about $250. We could gain exposure only one way, and it was through GBTC. We were able to put that security into our ETFs, and we've held where we could. I can talk about how ETFs and 40 active funds treated GBTC, but I think the important point about Bitcoin is back then it was only a $6 billion market cap. It has scaled in the last 5-6 years to nearly $1 trillion in market cap. Back then, therefore, there was really not the liquidity for an ETF. We are now moving into what I believe will be prime time. And I think helping it along is the demand from institutional investors. We've done a study, it's on our website, ARK-Invest, Yassine El-Mandra, about institutional participation in this space.
We interviewed him, by the way.
I think we did a million Monte Carlo simulations and came up with if institutions use that kind of analysis where they maybe want to minimize the volatility, or on the other extreme, maximize the Sharpe ratio, they probably should put something between 2.5% and 6.5% of Bitcoin in their portfolios. And the reason is that the correlation of returns to other asset classes is extremely low. In fact, according to our analysis, the highest correlation is to real estate, 0.34. And so it's what every asset allocator seeks, non-correlated assets. And we do believe this is the first.
So what I think is interesting about that, like I just talked about here, I pulled up this chart that she's referring to right now, is really the closest. You see it's color coded here. This is all the other asset classes for, asset classes for institutional portfolios. It's interesting to me that everyone compares Bitcoin to gold, but according to their research, actually real estate has a more close moderate correlation than even gold. Gold has a 0.24, which is a low correlation, and then real estate has a 0.34, the closest. It's not a high correlation at all, but it is a closer correlation than even gold, which is very interesting to me, and that's what she's talking about right now.
First new asset class, truly new asset class since the 1600s, since equities. So we're pretty excited about it. I think the most surprising development recently, and we didn't expect it when we wrote our institutional report, is that companies are now diversifying their cash with Bitcoin. We've seen Square do this, Tesla do it, MicroStrategy's it's defining its business around it now. And one of the reasons, as Tesla announced yesterday, is it would like to do business in Bitcoin in regions of the world, well, anywhere, but especially regions of the world where the conversion from from one fiat to another is prohibitively expensive. So that's been a surprise to us. And if we add all of the potential demand relative to the limited supply, we come up with incredible numbers over the long term. We have just begun. $1 trillion is nothing compared to where this ultimately will be.
Wow.
Strong statement.
So then in just a second, she's going to talk about boats. This girl's talking about buying a boat with Bitcoin. And then it's funny because Cathie Wood puts her input here and talks about how that wouldn't be highly recommended right now because of the way that the tax brackets are for spending your crypto. But she speculates that that's going to change soon. So let's listen.
They should have held on to it.
I just want to add one thing there. The IRS has something to say about this. So if you have huge gains in your Bitcoin, I don't think I would be very much in the way of transactions until we get maybe some changes on the tax front.
Yeah, very good point.
So right there, that's what I was talking about. She anticipates some changes. At least that's what she's hinting towards. So anyway, that's what she and her input is, Cathie Wood. Let's go over to Kevin O'Leary, which he talks about some things. Let me skip ahead a little bit here. He talks about some things specifically about like where Bitcoin is mined, which I kind of see what he's saying, but I disagree. And I'll tell you guys why here in a second, but let's listen in and hear what Kevin has to say.
do you want to have a situation where you're allocating a certain percentage or not? So that's the binary decision, yes or no, in or out. That's number one. Number two is a new problem that I think a lot of people haven't considered, and that is this coin compliant with committees? And the real issue there is around compliance on sustainability and compliance around other issues, such as, is this coin manufactured in countries that are abusing human rights or have sanctions against them? And I'm really speaking now of China. I've had many institutions tell me they do not want to own China coin. And as a result, that's going to be a problem going forward because the majority of coin is mined in China. So I'm spending a fair amount of my time these days trying to deal with miners that are willing to mine compliantly, not just for me, but other institutions that are really interested in owning a coin that have some kind of provenance to them. And so this is a new twist. And the only reason it's emerging is that the majority of institutions are not playing this asset class. I mean, it's exciting that some are coming in, but even at $1 trillion, it's tiny. If it's going to grow, it's going to be because it becomes compliant to ethics committees and sustainability committees. And so
I do agree with that. Regulation is key.
My strategy has been, as most people know that have owned Bitcoin, that you can tell the time of creation, but you cannot tell the location of creation. And if in fact you don't want to own China coin, or as now it's being called blood coin, which sounds a lot like blood diamonds, you're going to have to prove the provenance of where your coin was born, so to speak. And that means virgin coin, I think over time, will take a premium over widely distributed or coins that you don't know the provenance, including ones held in ETFs. It could be a challenge.
Okay, so just to kind of clarify from what I'm understanding, what he's talking about there, basically he's saying that just like people talk about blood diamonds, he's saying that as institutions come in into the space, a lot of them are telling him that they don't want to own blood coin or these coins that are mined in China or other places that may not be, responsibly mined. Now, that I think, in my opinion, and I may be wrong, we'll see how this opinion ages, but in my opinion, that's totally bogus. I don't think anybody really is going to care. I mean, obviously people care, but when it comes to like two different coins, if you're wanting to invest in Bitcoin, you're not going to invest and say, oh, I'm going to pay a premium for this specific coin, even though it's the exact same coin as some other coin. You know, when it enters the exchange, it doesn't care. Nobody cares. It doesn't matter. It is what it is. One Bitcoin is worth one Bitcoin. Now, I see what he's trying to say here, that yes, we don't want to enter a position where the majority of, Bitcoin is mined together in, China or someplace where they could shut it down. That kind of is more of a decentralization argument, but not, no one's gonna, like he's anticipating people paying a premium for a specific Bitcoin mined in a renewable, clean place, which we've talked about on this channel before. Energy Web Token is aiming to do this. I'm very bullish on Energy Web Token. They aim to make a carbon neutral, zero mining solutions for Bitcoin. I highly recommend you guys look into Energy Web. I'm not going to go deep into that right now, but that is a possibility. But what he's talking about is something that maybe I just think him or the institutions that are talking to him about this and, bringing up this blood coin argument, I just think it's uneducated in my opinion. I don't know. Let me know what you guys think down below in the comments. I'm very excited. You heard Cathie Wood talk about 1 trillion is just the beginning and that we're starting to enter prime time. I completely agree. Although right now the entire space is kind of going on a little bit of a sell-off, I think overall I completely agree. We're just entering prime time for the potential of Bitcoin. We just dipped below 1 trillion, and I agree. It's just the beginning. I think we're headed towards a full new market asset class, and I really think that that's extremely cool that Bitcoin fully is more correlated to real estate than even gold, which is going to start to be an argument here in the beginning or next few years. So anyway, thank you guys for watching. Let me know what you guys think down below in the comments. Make sure you like the video for the YouTube algorithm, and let me know what you guys think down below. I try to get to all my comments, so let me know what you think down below. If you're new to the channel, don't forget to hit subscribe and stay tuned to all the latest developments inside the space. Thank you guys so much for watching. I'll see you in the next one.